and get straight to the point. Disclaimer. In the midst of the roller coaster ride that is the cryptocurrency market, today's developments are nothing short of intriguing. US Bitcoin ETFs have just clocked their third consecutive negative day. Yet, in a classic display of its resilience, Bitcoin seems unfazed by the downward trend. In fact, it surged by an impressive 11% today, with Shiba Inu following suit with a remarkable over 10% increase. But what makes this news particularly captivating is the context. Just recently, the approval of Bitcoin ETFs unleashed a tidal wave of buying pressure, inundating the crypto space with hundreds of millions of dollars daily. And as you remember, this surge in demand played a pivotal role in propelling Bitcoin to a new all-time high, surpassing the $70,000 mark. As is often the case, other altcoins like Shiba Inu rode the bullish wave, experiencing a staggering 200% surge just a fortnight ago. It's become increasingly apparent that Shiba Inu holds a unique receptiveness to Bitcoin's every move, further emphasizing its symbiotic relationship with the king of cryptocurrencies. However, amidst this narrative of bullish momentum, there's been a consistent pattern of outflows from the Bitcoin ETFs, exerting downward pressure on the overall crypto market. These outflows reached unprecedented levels over the past couple of days, prompting concerns among investors. However, amidst the recent price dips, an intriguing development unfolded within the Shiba Inu ecosystem. One of the Shiba Inu whales made a bold move by purchasing over 300 billion Shiba Inu tokens. At the current token price, this acquisition amounts to over $8.6 million. And while the crypto market was dipping for quite some time, today, the market defied expectations. Despite witnessing significant outflows from the Bitcoin ETF once again, the crypto space rallied nonetheless. But now you might ask, why did the crypto market pump despite the fact that the Bitcoin ETF saw a huge outflow? Well, that's a good question. There are multiple reasons, but one of them is the emergence of rumors surrounding the potential approval of an Ethereum spot ETF in May 2024. These rumors have been circulating as multiple filings are being updated, akin to the process observed with the Bitcoin ETF before its eventual approval. And the logic is pretty simple. Consider the significant buying pressure witnessed over the past 2 months solely from the Bitcoin ETF. Now, envision the potential influx of additional buying pressure that could materialize with the introduction of an Ethereum ETF. It's a scenario that excites investors and market participants, as it suggests a substantial injection of capital into the crypto space, further fueling its upward trajectory. But just as optimism began to peak with the anticipation of an Ethereum spot ETF, a sudden twist took the market by surprise. The SEC made an unexpected move, reportedly issuing several subpoenas to companies involved in attempts to label Ethereum as a security. According to a recent Fortune report dated March 20th, the SEC's investigation into the Ethereum Foundation could potentially pave the way for Ethereum to be classified as a security. Speculation intensified as the foundation hinted at being under investigation. Subsequently, several US-based companies found themselves on the receiving end of subpoenas from the SEC, mandating the submission of documents and financial records pertaining to their dealings with the Ethereum Foundation. This development has raised concerns among crypto enthusiasts, with many interpreting the SEC's actions as an attempt to destroy Ethereum. Should Ethereum be officially classified as a security, it could spell trouble for the much-anticipated Ethereum ETF, potentially jeopardizing its approval. It appears that the SEC's campaign to reclassify Ethereum is gaining momentum, particularly in the wake of the blockchain's transition from proof-of-work to proof-of-stake in 2022. This regulatory scrutiny adds a layer of uncertainty to Ethereum's future trajectory and casts a shadow over the prospects of an Ethereum ETF gaining regulatory approval. But this is just the beginning. This development injects yet another layer of intrigue into the crypto space. With influential political figures weighing in on the matter, the regulatory landscape becomes even more uncertain. The implications of this letter could potentially shape the trajectory of not only Bitcoin, but also other cryptocurrencies seeking ETF approval. But hold on a second. In a surprising turn of events, it was revealed just yesterday that BlackRock, a major player in the financial world, has tokenized their BlackRock USD Institutional Digital Liquidity Fund into 100 shares on an Ethereum contract. However, this revelation raises eyebrows and prompts skepticism. It simply doesn't add up. Why would BlackRock, with its extensive resources and expertise, continue to develop initiatives on the Ethereum blockchain if there were serious concerns about its regulatory status. This perplexing situation has led some members of the crypto community to speculate that BlackRock may possess insider information suggesting that Ethereum is unlikely to be classified as a security. Otherwise, their continued involvement with Ethereum projects would seem counterintuitive. And here's something you should understand. It's a scenario that's become all too familiar in the world of cryptocurrency: the spread of fear, uncertainty, and doubt by certain entities looking to change the market behavior in a certain way. When FUD is disseminated, it often leads to panic selling as investors react to the negative sentiment. However, what's interesting is how the real heavyweights in the industry tend to respond differently. While the masses may succumb to the FUD and rush to sell their holdings, these big players often remain unfazed. They see through the noise and recognize the FUD for what it is: baseless speculation designed to shake out weak hands. Time and time again, we've seen these big players emerge on the right side of the trade. Their ability to remain calm amidst the storm and make informed decisions based on solid fundamentals sets them apart from the crowd. While others panic and sell at the slightest hint of trouble, these players stay the course, confident in their long-term vision for the market. Nevertheless, only time will provide clarity on this matter. If an Ethereum ETF were to be approved in the near future, it could trigger another wave of buying pressure, potentially catapulting the entire crypto market, including Shiba Inu, to new heights once again. Until then, we can only watch and wait to see how events unfold in the ever-evolving landscape of cryptocurrencies and regulations. And let's leave our emotions aside and reveal some cold statistics. A tweet has surfaced that encapsulates the current market dynamics succinctly. Days after breaking old all-time highs. Currently, 13 days to bull market peak after breaking old all-time highs, between 266 to 315 days. This tweet implies that we may have approximately 300 days ahead of us before the bull market truly reaches its peak after surpassing previous all-time highs. It serves as a sobering reminder that while breaking old records is exhilarating, the true extent of a bull market's potential may take several months to fully materialize. And let's not forget about Shiba Inu's official team, who believe that Shiba Inu could reach its all-time high before the upcoming Bitcoin halving event, which is less than 30 days away. When juxtaposed with the potential 300 days of bullish momentum predicted by the tweet, it becomes evident that we're in for a ride filled with twists and turns. It is now clear that the road ahead promises to be intriguing as we navigate through the complexities of the crypto market, with Shiba Inu and other tokens poised to play significant roles in shaping its trajectory. But what is your opinion on that?